Welcome to Plus One, a short form webinar series hosted by me, Stephanie Rising of The Rising Effect, your small business coach. My co-presenter today is Marie Gooch, financial advisor at the Hopman Group. Our topic today is about how to manage finances in fluid times. Marie is going to kick us off with the actions business owners can take to get a better grip on their finances. Then I'm going to lead us through 5 specific ways to recover cash in your business. We each have 3 slides packed with actionable information you can learn in about 15 minutes or less. So let's jump in. Marie, we'll start with you.
Thanks, Stephanie. And as I thought about this topic of finance in fluid times, I really kept coming back to the fact that we're always in fluid times. So rather than talk about specifics around the pandemic, I wanted to talk about just some general things that business owners need to be aware of and need to have a plan for. So if you're a business owner and your income depends on your intellectual or your physical output, there's some things you need to think about, as uncomfortable as they may be. The first one is, what if I can't work or work to full capacity? This could be from a natural disaster. Hey, we had fires right here in Tucson this year that were affecting businesses and homes. My sister had a battery explode in her garage last year, causing a fire. Luckily, it was contained to the garage. Nobody was hurt, but she was thrown into a situation where she was out of her house and away from her painting studio for months, dealing with insurance, remediation companies. Something like that could happen to any of us. So what is the plan for that? Then there's disability. There are ways to protect against loss of income, and I work with individual clients to figure out what is going to be the best option. Sometimes it's insurance, sometimes not. But you also have to think about, what if your spouse or partner becomes disabled? What if my husband has a heart attack and I'm thrust into the role of caregiver? Disability insurance would cover his lost income. It's not going to cover mine. What about death of a loved one or a business partner or a key employee? The only thing worse than dealing with the death of someone you really care about is dealing with the death of somebody you love and dealing with the financial stress and uncertainty at the same time. As uncomfortable as it may be to think about these things, that's nothing compared to what it's like to face them unprepared. This is where talking to an empathetic and understanding financial advisor like me can really help. First, I never discount the fear, anxiety, and discomfort that comes up around these topics, but I do help clients move past those emotions and into taking action. And that's where the feeling of control comes in. Second, you'll notice that I'm not giving a lot of solutions to some of these scenarios. That's because the solution needs to be individualized and congruent with the client's other financial goals. And again, that is where a financial advisor, as opposed to somebody who just does insurance, can really be valuable. So other things to think about. What if I have legal issues? I'm not an attorney, and nothing I say should be construed as legal advice, but I can say it's important to make sure you're operating under the proper business entity. Stephanie, I'm sure you talk to your clients about this.
Yes.
Even if you're a solopreneur, it may be advantageous to set up an LLC to limit your personal liability. This is where you want to consult a CPA or a financial counselor who has a strong background in taxes, like our firm does. If you are operating as the sole proprietor and you have personal liability, please talk to your home and auto insurance person to make sure you have the right coverage. Now we have the positive one. What if I become wildly successful? I've had 2 clients recently who had really big success come out of the blue last year. But because both were waiting to consult with a financial professional until after their income took a big leap, both ended up with a huge tax bill, like more than my first house cost tax bill. So one thing I work on when focusing with my clients is to start with the end in mind. Whether it's your business entity or your type of retirement plan you're setting up, look at where you want to go as opposed to where you are now. So how much time, love, and attention are you giving your finances? That's kind of my bottom line here. Money is important. not just for its own sake, but it's the critical tool that allows us to live our life's purpose. When Stephanie's business is successful, she can help more businesses become successful, which is what she loves to do. When my business is successful, I can help more people get confident and clear on their money, which is what I love to do. But despite the importance of our money, people sure don't want to deal with it. I hear all the time, oh, it's too complicated, it's boring, it's too stressful, I don't have time to mess with that. And then, of course, business owners add on, well, I have a CPA and a bookkeeper and a payroll company. Therefore, my money's taken care of. Ultimately, nobody should care more about your money than you do. If you aren't giving your money any love, time, or attention, if you're not thinking through some of these what-if scenarios, how are you going to attract more money to you? If you're ready to think about some of the what-ifs I talked about, or if you feel like you should be giving your finances a little more love and attention, please reach out to me. I offer a no cost, no obligation 90-minute review. I'd love to get to know you and see how I can help. Thanks for having me, Stephanie.
Thanks, Marie. That's really good information, and I really appreciate you being on the webinar today. And just piggybacking off of that, my first question for everyone is, how many of us have experienced the sheer joy of finding money? Like, this is stuff we find in our couch, or maybe it's in our pants pockets that have been through the wash. It could even just be a quarter laying on the sidewalk. There is just something about finding money that puts pep in our step. So why is it that we don't go looking for cash that's hiding in our own business? And I think that part of it has to do with shame. Small business owners are really hard on themselves. When we make a mistake, especially a costly one, we play the blame and shame game with ourselves as if we always have to know better. And the fact is, we all make mistakes and we all have gaps in our knowledge. This is very true when it comes to managing money. There are countless ways a business can leak cash, from inventory to equipment to advertising to receivables to underpriced products and services. After 14 years as a coach, I can honestly say that every business owner I've worked with has bled cash in some way. And I tell you this so you know that you're in good company. So let's give ourselves some grace and look at objective steps that we can take to recover cash for the betterment of our businesses. So first, you want to have an annual operating budget in place with target percentages for labor and cost of goods sold. It's easy to get frustrated with employees who don't appear to use good judgment, but if they don't have context for their decisions, then, quote, good judgment quickly becomes a very muddy standard. Make sure your core team of managers has basic financial literacy, that they know how to track and calculate their labor and COGS. I'll be totally candid here. This aspect of business does not come naturally to me. I've had to surround myself with advisors who I can call to help me understand financial terminology and what my numbers are trying to tell me. So if you struggle with this as well, this is a great opportunity to show leadership by inviting an advisor to do training with you and your team. And if you need a resource for this, please let me or Marie know. Next, you want to make sure that you're getting timely and accurate financials. If you're always getting financials 2, 3, or more months after the fact, that's exactly like driving a car at night with no headlights. You're not making clear decisions, period. You can't just go by what's in the bank because it's not the whole picture. Just knowing your account balance doesn't tell you whether your revenues, expenses, or profits are higher or lower than budgeted. It doesn't reveal trends or break down your income by revenue stream. So you want to ask your bookkeeper to provide you with P&Ls in a variance report format. You should be able to plainly compare the current month's performance with your budget and with the prior year. The brain makes better decisions when it has points of comparison. So make sure that your financials are both timely and in a useful format. A real key to recovering cash in your business is maintaining a low receivables balance. It's imperative that you have a process in place for collections and that someone is clearly in charge of leading that effort. When I talk about receivables, it's not the 30-day column that I worry about. It's the over 30 days that you need to have on your radar. Unless you are a bank, you are not a lending institution. Clients who do not pay their bill on time are essentially taking a loan from you for free. On top of that, they're taking cash out of your business's circulation, and that's cash used for payroll, rent, utilities, and other obligations you still have to meet. So it's a good idea to explain your billing process as part of onboarding new clients. Set the rules of engagement from the start. If you do large projects over long periods of time, it's a good idea to get progress payments. I also strongly encourage you to meet quarterly with an outside financial advisor or accountant to review your financials. For those of us who are not financial experts, we tend to know enough to be dangerous, but probably not 100% effective. P&Ls and balance sheets can do more than just serve as tax prep. Every set of financials tells a story. My financial advisor looks at my books as if she's reading The Matrix. I see numbers, but she sees trends and possibilities. A good advisor more than pays for themselves by providing a profit analysis and action plan that helps you create cash for your business. Lastly, I want you to think about the last time you went to the doctors. It doesn't matter why you were there. They will always take your weight, pulse, and temperature. They'll always listen to your heart and lungs, and they'll always stick that thing in your ears and up your nose. Why? Because it gives them a baseline idea of your health. You want to do the same thing for your business. Think of what you need to know at any given time to understand whether your business is healthy. Is it the number of sales calls each week? Is it your labor percentage? Is it the number of repeat customers? I encourage my clients to pick about 5 to 7 key metrics that can tell them and their team how healthy their business is at any given time. It also gives them specific data that they can take action on, either capitalizing on things going well or heading off things that are looking problematic. One of my financial mentors told me something that I'll never forget. He said, revenues are vanity, expenses are sanity, but cash is king. He taught me that while revenues are certainly the lifeblood of any business, they can also easily hide where cash is leaking. That's why you want to look at the performance of each revenue stream, so the whole lump sum of revenue doesn't bury problems. It's also important to review net profit relative to your gross revenues. Revenues can be a big, sexy number that many business owners fixate on to fuel their optimism, but net profit is a better indicator of how the business is truly performing. Now, with respect to expenses, I learned something valuable from the Hopman group. And that is every dollar should have a purpose. When you know both how much is being spent and why it's being spent, you are being a good steward of your company's resources. That stewardship is essential to creating stability. The downside to focusing exclusively on reducing expenses is that there's only so much you can cut before you ultimately wind up choking your own growth. Not investing back in your business leaves little to no room for updating equipment or technology, or maybe adding an employee who can create more operational capacity or sales. And so we find ourselves focused on efforts that create good old-fashioned cash. Cash creates operating reserves. It creates opportunities for profit sharing, which is a benefit that helps attract and retain top talent. It enables you to invest back into your business, and it's a safety net for unforeseen downturns in your industry or the economy. The sum total effect of all of that is way less stress for you as the owner. I mean, who doesn't sleep well at night with cash in the bank? So if developing this and other aspects of your business interests you, you can download my 10 secrets to transform your business and book a free initial consult on my homepage at therisingeffect.com. And I'd like to thank again my guest, Marie Gooch of the Hopman Group. We welcome your feedback on this episode of Plus One, and thank you for joining us.